All right, thanks for sticking around. We're on the last lap of the program as usual. So let's bring in commodities in here. Crude prices trending a little bit lower because U.S. is increasing its shale production, so there are threats to others around the world. That's no longer news, as it were. But of course, if you've seen crude prices, whether it's Brent or other benchmark crude like the West Texas Intermediate and others, is being that. But if you look at the Agric prices, that's also a little bit in a topsy-turvy. Largely, cocoa is still down. Wheat prices is down. Sugar is also significantly down since we started the year, about 17%. Now, this set of data from financial derivatives is what we're putting on the screen for you to try and make sense of what you're looking at there. The Bloomberg Commodity Index that is tracked for us by financial derivatives company, our data provider for this show, declined 1.56% since the start of the weeks. Now, this is the first one in the new month of July. If you flip over and try to see where the core numbers are coming through, Brent is a bit flat at 0.02%. A lot of geopolitical concerns there, 9.89%. We've seen an upside year to date of Brent crude around almost 13% when we started the year. Now we're shaving that off now below double digit. WTI also down 2.08%. Natural gas is also down 7% since the year started. Now look at the Agric very quickly to give you a snapshot at the economy from FDC. Is on the wire for us via Skype to talk to us, but let's put it through to you. You see the price of corn and the week to date performance in the second column, positive 7.78%. Wheat is also riding a little bit, 0.86%. Rough rice, 3.08%. Sugar, still down year 12.21%, 12.21%. That's 3.07. Cocoa is significantly lower. There are concerns from Ghana, the world's second largest cocoa producer. Most likely, Ivory Coast will offset those significant expectations of harvest decline from Ghana, so we think that will come in. But all this hasn't translated into anything much. If you look at palm oil, it's also down 6.18%. Let's get this from those who put the numbers together. Ada Economy is an economist and analyst with financial derivatives company, and she's live to us via Skype. Ada, good morning to you.
Good morning.
Yeah, thank you very much for coming through. Talk to us about this market. Let's stick with the Agric prices, and some of the other reports we're receiving from FPN Capital shows that, yes, these numbers have been down. Wheat is down 7% year to date. Sugar, almost 17%. The crude palm oil, around 9% negatively. And the firms in Nigeria, like Nestle and others, haven't done anything about it. It doesn't reflect anywhere.
Wheat prices are increasing, actually. This is as a result of droughts in Canada, and there's droughts about to hit the fields of Canada. And this might actually result to a shortage of 12 million metric tons of wheat exports. As well, Australia, these are major exporters of wheat. Australia is preparing for dryness as well, in preparation for the El Nino season about to hit the area, as well as dryness in Europe. So all these are causing wheat prices to increase. However, the U.S. as well, there was an unexpected, the estimated wheat stockpiles was actually higher than they expected. So I'm assuming this would balance out the supply-demand dynamics.
Well, okay, so let's talk about the damage or the likely impact of the weather. There are forecasts that El Nino will be very severe in the second half of the year. So our farmers and traders and those of you who are analysts, including investors, are concerned about this. But how much higher do you think wheat prices will go, and sugar, which is a very close cousin of wheat? If you're making, if you're a confectionery companies, you're making baking cake and things like that, and pastries and all of that.
Sugar prices are actually reducing. This is as a result of ample stock from India. India, however, has reached a big production, so they produced more sugar, as opposed to the global demand. So there's more sugar in the market. There's more supply of sugar in the market in relation to the global demand. So this is causing sugar prices to reduce.
Okay, now let's spend just about 2 minutes to talk about soft commodities, crude oil, that is. Are there concerns there that with what you're seeing in rising crude oil productions from the U.S. and the OPEC members, second half, we're likely to stick around 60, 62 till the year runs out?
Yeah, crude oil prices are decreasing, and there's literally a marginal decline in crude oil prices, and this is likely to carry on for a while. This is as a result of the U.S. as well has seen an unexpected increase in its crude stockpiles, as well as OPEC countries are producing more oil. This end of June, there was an output of 31.60 million barrels per day, as opposed to 31.30 million barrels last May. So there's more oil production from OPEC countries, as well as the U.S. as well. There's more shale production, and the impact as well on Greek crisis has put pressure on crude oil price.
So it all boils down to oil-producing countries across Africa, and this is not just Nigeria, whether it's Angola and those who are interested in producing oil like Ivory Coast and Equatorial Guinea, in terms of what revenue comes into them. Do you see this as a major issue that will have a bit of a knock-on effect on the fiscal space in terms of revenue and what you have available to fix a number of issues such as infrastructure?
I'm sorry, please, could you repeat the question again?
Yes, I was asking about the continuous decline in oil prices, and that also put pressure on your revenue, isn't it? And that will eventually put pressure on how much you have as a disposable income as a government to spend on critical issues such as infrastructure, social welfare programs.
Yeah, continuous decline in oil prices will affect major exporters of oil, because they'll be selling this oil at a lower rate. And this, for example, Nigeria's economy that depends majorly on oil revenues. If this decline in oil continues, it will have a negative impact on our government revenues, and we'll continue to see a reduced amount given.
Okay, let's leave it at that. Ada Akonobi, thank you very much, economist and analyst at Financial Derivatives. Okay, let's wrap up the program. Look at our energy market. That's where we'll give you a very small snapshot of what's happening locally here from the broader space of our market. Look at the price of oil stocks, those majors that are listed on our market. We capture that for you on a daily basis here. A very major downside all through on the first trading day of the new month. That was yesterday. No stock in that space moved on the upside, all negative. Others were in the red. Mobil was down 3.23%. Almost the same margin, almost 4% for Seplat, and Oando, on the news of those announcements, of course, was in sympathy with the rest of the market. But if you look at what is now on your TV screen, Oando explains the new Vitol and Helios strategic $416 million partnership, and what's happening in that space you'll get to hear later in the day on the channel. And of course you heard about the largest power plants in southwest Nigeria, Agric, generating now 1,000 megawatts for the first time in 8 years. Okay, we'll leave it at that. Digest those numbers and those set of news while you wait for the bigger news just coming up around the corner. At the top of the hour, you'll be listening to our headline news at 11 local time here on Channels Television. I am Bosun Amofai. Thank you very much for watching, and I will see you pretty soon.